Welcome to the B.F. Anderson Technical Report for April the 7th. Blowout ATP jobs growth is new evidence of economic traction. Leon Cooperman says on Trump, the market is acting like it's being run by capitalists. You know, I would like to propose a theory. The theory is that history does tend to repeat itself. Now, what I mean by this is that there are certain economic patterns that are mirrored in the stock market that need to be observed. Now, if we go back in time, and I've got a graph here that goes back to 1980. Now, what my theory is that Trump Brexit is very similar to Reagan Thatcher. The similarities are just too numerous to ignore. And so what happened, if we go back in time and just look at this period when Reagan came in, now realize the Dow Jones Industrial Average hit 1,000 for the first time in 1966. Now it had lifted off in 1952. So it peaked in 1966 at 1,000 and did not get back above 1,000 again till 1983. So we're looking at 17 years of the market doing nothing but going sideways. Then Reagan came in, Thatcher came in. We started to see not only a change in the United States, but we started to see a change globally. And the change is very simple. It's like a pendulum. We were swinging from socialism to capitalism. And I'm going to tell you, the stock market likes capitalism. Now, you notice here how when Reagan came in, we went through a dip, but then once his policies started to take hold, we went into a very, very nice bull market. You can see here that the market went from basically 1,000. Then I'm going to point out that things started to change in 1998, and by this time the market's almost basically to 10,000. So what were the changes that took place? Well, the 1983 to 1998 bull market was a 15-year bull market. So the main point I'm trying to make here is that if my theory is correct, we could be looking at just the beginnings of a bull market. This thing could have a very long time to go, very long way. See, I think people underestimate economic trends. For example, take the trend in interest rates. I mean, interest rates peaked in 1980 and then have dropped for 35 years. So that trend has been a 35-year trend. But what really took place here in this period of time was that the Federal Reserve monetary policy was dominating the scene in the late 70s, early 80s because hyperinflation had taken hold and the Fed had to take drastic action and raise interest rates to basically 21%. But once all that changed and it reversed, and then we went into something that was different. We went into fiscal policy, which was tax cuts and regulation reductions, getting government smaller. That type of attitude was happening. It was a shift from socialism to capitalism. So you can see here that this was a beautiful, beautiful bull market. Now something changed right here in 1998. So what I want you to notice is the steepness of the line that took place during this bull market era. But then all of a sudden, we get this shape of a line that just, in fact, it's really a very difficult trend line to draw because we had bear market, bear market. What started to happen in here? What started to happen in here was, first of all, in 1998, we had the bailout of long-term capital management, which was just the beginning of bailouts. I mean, then we bailed out General Motors. Then we had to bail out Chrysler. Then the Federal Reserve had to bring interest rates down to 0%. Even Japan brought interest rates to a minus negative interest rates. And also, Japan actually started buying stocks. So something changed here. What changed was more government, less capitalism. started to see more bailouts, the economy's in trouble, things are just not going well. Then all of a sudden here, we start to see some breakouts. Now, we had a little consolidation here over the last 3 years, but notice this breakout, and then you kind of have to notice this breakout. So, I mean, I don't want to be crazy optimistic here, but I am saying something has changed. And if you realize, very similar to that 1966 to 1983 period, we've gone through 1998 to 2017, which is 19 years of sideways action. So something has changed, and what we believe has changed is the government is now starting to back off on monetary policy, and we're going to see more economic policies revolving around fiscal stimulus, which would be tax cuts. Now, I don't want to sound too political, but that really could be what's going on. So, we move to the next chart. So the question is, does Trump equal Reagan? I mean, is that what we're dealing with here? I mean, if you understand Brexit, all really Brexit boils down to is where, sections of Europe are starting to say, hey, Great Britain and Germany, etc., are starting to say, hey, we're kind of getting fed up with this socialism stuff, and we want to start growing again and get capitalism back. So you can see here what I've done here. I've just taken a 200-day moving average of the market going back to 1990, and you can just kind of see the difference here. Now, we broke out here and moved up. Now, this was all because of lower interest rates, but the breakout we're seeing now, I think, will have more to do with fiscal policies. Now, Ronald Reagan said in his famous quote, he says, as governments expand, liberties contract. So it's kind of like, what Trump is saying now, make America great again. It's the same concept. So you can see again, we had a lengthy period of time where we did nothing but sideways action. Now we've consolidated a little bit more, but we are breaking out. Is this the beginning of a new bull market? And I believe it is. That's my opinion. Now, if you look at surveys that have been done lately, there was a survey of small companies. They're the most optimistic they've been since 1980. Chief financial officers and chief executive officers are the most optimistic they've been since 2004. And so we're breaking out on really some pretty optimistic economic policies that are taking place. And this could be a long-term shift. This could not be just a short-term thing. So to kind of bring us up to date on where we are now, what I did here is I took a substantial number of daily moving averages. I took the 25-day, the 50, the 70, the 100, the 200, and the 300, just to show you where we've been here in the short term. We went through a tremendous amount of confusion here. There was no uptrend of any kind. And this was basically, in my opinion, this was a bear market. And I've always said, following difficult markets, we usually have easier markets. So really, since last summer, we're starting to see these moving averages unwind. And then since the beginning of the year, you can see how smooth all these moving averages are. So if you were to go back and look at these moving averages in 1983, you would see pretty much the same thing. So in conclusion, what I'm saying is something has changed. And I believe it's a shift to capitalism from socialism, and this is going to be a long-term trend. Call me if you have any questions.